Good morning, everyone. Today I'm going to speak on the topic national income. What is national income? National income measures the total value of goods and services produced within the economy over a period of time. Why is national income important? Measuring the level and rate of growth of national income is important to economists when they are considering first economic growth and where the country is in the business cycle, second changes to average living standards of the population, third looking at the distribution of the national income, that is measuring income and wealth inequalities. Different methods to calculate national income: first value added method or production method, second income method, third expenditure method. Value added or production method. Value added refers to the addition of value to the raw material, intermediate goods by a firm by virtue of its productive activities. It is contribution of an enterprise to the current flow of goods and services. It is calculated as the difference between the value of output and value of intermediate consumption. Steps and precautions while calculating national income by value added method. Steps: identify all the producing units in the economy, classify these producing units into primary, secondary, and tertiary sector, calculate the value of output of all three sectors, uh, calculate intermediate consumption of all three sectors, subtract intermediate consumption from value of output, and we get GVA at MP. Now subtract depreciation and add net factor income from abroad to get national income. Precautions: intermediate goods are not to be included. Sale and purchase of second hand goods not to be included. Production of services for self consumption not to be included. Imputed value of owner occupied houses should be included. Change in stock of goods will be included. Income method. The income method measures national income from the side of payments made to the primary factors of production in the form of rent, wages, interest, and profit for their productive services in an accounting year. Hence, value of national income method should be the same as the one calculated by value added method. Steps: identify all the producing units in the economy, classify these producing units into primary, secondary, and tertiary sector, calculate the value of output of all three sectors, calculate the intermediate consumption of all three sectors, subtract intermediate consumption from value of output, and we get GVA at MP. Now subtract depreciation and add net factor income from abroad to get national income. Calculate the compensation of employees, operating surplus, and mixed income of self employees. Add them to get NDP at FC. Add NFIA to get national income at factor cost. Precaution: do not include transfer income, do not include value of second hand goods, do not include financial transaction like selling and purchasing of shares, do not include illegal incomes. Imputed rent of owner occupied houses is included. Expenditure method. The expenditure method is a system for calculating gross domestic product (GDP), combines consumption, investment, government spending, and net exports. Steps: identify all the producing units in the economy, classify these producing units into primary, secondary, and tertiary sector, calculate the value of output of all three sectors, calculate the intermediate consumption of all three sectors, subtract intermediate consumption from value of output, we get GVA at MP. Now subtract depreciation and add net factor income to get national income. Calculate personal, private, household, final consumption expenditure. Calculate government final consumption expenditure. Steps: calculate gross domestic capital formation. For calculating it, calculate gross domestic fixed capital formation by adding business and investment, public investment, residential construction investment. Then calculate change in stock and then add to get gross domestic capital formation. Calculate net exports, exports minus imports. By adding we get GDP at MP. Now subtract depreciation, add net factor income from abroad, and subtract NIT, that is net indirect tax, to get national income. Precautions: do not include intermediate expenditure, do not include transfer payment, do not include expenditure done on feeding beggars, do not include expenditure done on second hand goods. Points to remember: value added method, GVA at MP of primary sector, add GVA MP of secondary sector, GVA at MP of tertiary sector, gross domestic product at market price, minus depreciation minus net indirect tax, domestic income, add net factor income from abroad, we get national income from value added method, add compensation of employees, rent and royalty, interest, profit, mixed income, we get NDP at FC, add net factor income from abroad, we get national income from income method, private final consumption expenditure, government final consumption expenditure, gross domestic capital formation, net export, add gross domestic product at market price minus depreciation minus net indirect tax, domestic income, and after adding net factor income from abroad we get national income from expenditure method. Thank you.